Good Sunday, ladies and gentlemen, and welcome to the show on this Sunday, the 15th of August, 2021. Thank you guys for tuning in. I'm glad to have you guys here. Now, in the past 24 hours, I've been doing some research, and I found out something that I didn't know before, which actually changes my outlook to a certain degree on what's going to happen in the economy. What I found out was, I'm basically going to kind of sum it up for you guys because it's very complicated. But to try to sum it up is kind of complicated too, but I'm going to give it my best shot. What's happened is you guys know about all these big, enormous packages they've done. The first one starting $2.2 trillion at the beginning of this COVID crisis. And then there's infrastructure ones, and there's like, we don't even talk about the $0.9 billion, that's $900 billion, almost $1 trillion. There's one of those, and there's a whole bunch of them, whole bunch of these packages. Boom, 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 they brought them out. And if you lump them all together, it's probably getting up toward $10 trillion. Massive amounts of money that they injected into the system. What I've learned in the last 24 hours is, because they've injected all this money in the system, what they've done is they've leveraged the system up much higher than it was before. Much higher than it's ever been before. This leverage. And this leverage has had an effect. The effect is the system is running in what I would call right now a sweet spot. The markets, it's made it so things can't go down. Things can't change. What's happened is the bond market now, the yields can't go up. If they go up, the system's going to explode or implode. Gold prices can't go up substantially, and silver too, or the system will implode. Because of this leverage, they have to keep the system right in this slot. It's like in a slot it's in right now. The stock market can't fall by maybe more than 5 or 10%, and the system would. Everything's become unstable in the system because of this over leverage that they've just done in the last year or two. So that they have to keep it running in this narrow channel. What it's done is it's the ones who run the system, the central banks, have to keep everything right in this sweet spot. It doesn't allow for any movement. Do you remember back when we had inflation back during the 1970s under Paul Volcker? They had the mechanism then that they could raise interest rates up to 20%. Paul Volcker raised interest rates up to 20%. Didn't blow up the system. Because the system was healthy then compared to the way it is now. And what causes the system to be sick is all the over leverage, all the derivatives products, all of the exorbitant. What they've done is they've money multipliers. An awful lot of these derivatives products are swaps, and they're interest rate tied into interest rates, and we're talking quadrillions. Just maybe one bank might have like $50 trillion worth of nominal derivatives on their books. The system can't move. So there's no mechanisms anymore. So the Fed, basically what this means is that the Fed is hamstrung. They're hog-tied, basically, in one direction only. There's only one thing they can do, and that's print money or create new currency units, which creates even more leverage in the system. And there's only one direction that they can move now. It's toward inflation. And so this means that the Fed is pulling a courageous bluff on everyone out there when the Fed chairman stands up in front of everybody and he announces, we have tools to fight inflation. Yes, they do, but they're tools that they can't use right now without blowing up the system, without destroying the system. And so all this talk about taper and everything else and all this, they've always put it like a year off or we're going to taper soon or everything else. It's all a bluff. And it's only a matter of time now, perhaps days, perhaps weeks, perhaps a few months, until the entire world figures this out. And until they start to believe in what they see right in front of their eyes, which is persistent inflation, rising inflation. Inflation is a monetary phenomenon that's self-feeding, self-perpetuating because it has to do with confidence in the currencies that we're using. Very rapidly, confidence is going to start to be lost in the next number of months. I can't put an exact time frame on this, but I can see it coming soon, and I can see an awful lot of people out there are coming to this realization that, hey, you know what? This inflation's not transitory. It's coming in like a tidal wave. And what am I going to do on my own personal level? How am I going to get out of this? Well, this is the interesting part of all this, is there's not many doors out. What we're dealing with here is nothing less than like a large group of people in an auditorium, a big auditorium, maybe thousands of people. Let's say 10,000 people, and they're in there. Maybe it's a craft show, you know? What happens when somebody yells fire and they all have to head for the exits? Well, in this case, the exit doors are very small. They're gold, silver, and cryptocurrencies. Perhaps there's a few other avenues, but these are the main avenues out. Is gold, silver, and cryptocurrencies. I mean, there are other things. There's maybe farmland, or maybe you could buy diamonds. I don't know. But there are a few other things. Maybe you could buy platinum or whatever. But the main avenues out are gold, silver, and cryptos. But here's the ticket, guys. They control the gold market. They've got absolute control, and they've just shown us this in this last week or two. Over the spot price, they have control. They don't have control over the real physical price. What do we got coming very soon? It's looking to me like I should update my forecast and give a higher percent chance now that we're not going to have a deflationary event. That we're just going to slowly move in, and maybe not so slowly, toward hyperinflation. And at this point, I would say it's pretty much inevitable. Because the Fed's trapped. They can't move. They have to stay in a direction that's been slotted in for them. Basically, it's like this: if they try to do anything to get out of this, they're going to blow up the system and then have to do even more, which is going to make it even come quicker. It's basically over. And what this means is for your own personal finance. Let's talk about gold and silver a little bit. Yes, it exists in the real world, but there's going to be an enormous problem for gold and silver is that there's not unlimited quantities out there. And what's going to happen is it's going to disappear. So if you're waiting for that lowest price and everything, and you don't have any gold and silver, when it disappears, you're not going to be able to buy any. Because what they're going to do is they're going to continue to supply industry. And industry's going to get it all. And you're going to find that these gold and silver dealers, and this is directly in our future, it might be 6 months away, I'm just guessing at that. It might be a year away, maybe at the most. But these gold and silver retailers, I don't know what they're going to do. I think perhaps they might have to go bankrupt. All of them. Because they're not going to have any product to sell. Because they're going to allocate all the product for industry. And they're not going to be able to obtain any supply. And this is the business they're in, is retail, selling into the retail market for gold and silver to you guys. If they don't have any to sell, how are they going to stay in business? If it's all being, all of the gold and silver from the mines has already been spoken for, there's going to be none for the retail product and retail product demand at any price. And the only way they're going to be, these retail dealers for gold and silver are going to be able to obtain any product to sell you guys is if somebody comes in and sells. And who in their right mind is going to come in and sell for fiat when fiat's losing value so fast? Or very few would. Maybe a few people would. But what kinds of premiums would they demand? And even if the gold and silver dealer, like, if they, I could see them, a lot of them going out of business, to tell you the truth. These are very interesting times, guys. I mean, but this is also a big fault for gold and silver. Big problem. Big, huge problem for gold and silver. Because the crypto market's right over there. And it's a big door with a big for sale sign and a big open sign on it. Once the gold and silver's all gone, you can't buy any. What we're looking at is so much. They've created so much of this fugazi, or this paper money product. And it's going to be looking for a home once everybody decides to get out of it. Once the big money decides to get out of it. And they're not going to be able to obtain any gold and silver. Do you think they're just going to give up and throw their hands up in the air and say, okay, we're going to stick with the dollar now, even though it's losing 10% a month? No, they're going to still want to get out. And I could see them all coming to roost in the same tree. Cryptocurrencies. And because the gold and silver market, especially the silver market's very small, it could, and this is the way I've been talking about this for a long time, how the gold and silver is going to disappear first. Be gone. You ain't going to be able to buy any. Price is going to shoot to the moon, and I mean moon, in the physical. Where the weird thing is the spot price might still be down low. And then everybody is, because they just can't buy any gold and silver, they're going to flock into cryptos. And cryptos is set up that it can absorb all of that. It's set up so it can absorb all of the fiat. But basically, what is that when that happens? It's a wealth transfer. That's what it is. It's a wealth transfer. So basically, your fiat's like an elevator that's going down to the basement. And your cryptos and gold and silver is like the elevator that's going up to the penthouse. They're both moving in opposite directions. And they have been all along, but it's been slow. Once this realization occurs to everybody that they're going to lose money if they stay in their fiat, and that this is going to keep drifting toward hyperinflation, then this thing's going to pick up speed. See, there's a problem out there. There's a huge problem out there. Is the problems that we face here in the financial system are on an exponential. They're increasing at exponential speed. And the reaction to this exponential is on a linear plane. So the Fed is acting on a linear plane to an exponential problem. And if we understand, our brains don't really understand exponentials, but we're in the final stage right now of this exponential. The money's went exponential. I told you guys this. I did a whole show on it maybe, I don't know, maybe a year ago. And I said the money's now gone exponential. And an awful lot of you guys didn't understand what I actually meant by that. And what I meant by that is it's taken more and more money, injections, to get less and less back in growth, GDP. And it just basically, it's like pushing on a string, but they have to keep pushing on that string because they have to keep the interest rates low, or the housing market would fall to pieces. And you know how enormous that market is. If they let the interest rates rise, the stock markets would all crash. So they can't let interest rates go anywhere. This means that savers, your pension funds and everything else, can't make any money anymore. So they have to take higher and higher risk and go after higher and higher yield. The system is starting to break and fly apart. And you know what it reminds me of, guys? It reminds me of a tractor pull. You know, they put big complicated engine out there and is capable of maybe 68,000 horsepower or whatever. You know, this big Hemi and whatever, and all these big parts and everything on the engine. And when they're goosing it, giving the gas to it, you know, a big plume of smoke comes up above the tractor and everything else, and you can hear the roar miles away. And all of a sudden, bang, ping, pong, plung, the whole thing flies apart and a big fireball comes out of the side of the engine. That's what our financial system's doing right now. It's the whole thing is starting to come unwound, and we're in the initial stages of this. And the Fed's going to do whatever it takes. Well, of course, the answer is going to be money, to print more. It's the only answer they have. You got to protect yourself. And how you protect yourself is by diversifying into assets that are non-dollar denominated. You have to get into primarily gold, silver, and cryptos. And really, to be well-rounded, you need all three, not just one or two or everything. You know, I know that there's a lot of you guys out there who've never dabbled in crypto before. You got gold and silver. You don't even know how crypto functions. Well, you know, play with it. Don't jump right in there and take $20,000 and try to buy Bitcoin or whatever in your initial go, because if you do that, you might lose it. You might not know what you're doing. You might enter in a wrong address or something like that. So play with a little bit, a tiny little bit, and learn how to send it across the internet. Learn how to receive it. Learn how to store it on your computer. Learn how to put your private keys away and everything else, you know, and do it slowly. And then when you really have mastered it, and so you really understand it, then you can make a larger investment into it. You know, because it's not as simple as gold and silver. Gold and silver is simpler and easier to buy. And what I'd recommend, you know, if you guys are buying gold and silver for the first time, stick with your quality product. Buy from a quality dealer. Do not look for bargains in gold and silver. Pick up a big online retailer like AppMex or Kitco. Big online retailer like Gold Silver Bull, you know, and buy your coins that are most popular. Buy the 1 ounce coins. This is the coins that's the best to buy. Buy Eagles or buy Maple Leafs or buy from the Australian Mint's good. You know, things like Philharmonics, Britannias are good. You know, these are very common coins, easily recognized and easy to move on the other side. And if you're buying from a major retailer like AppMex, it's a very, very small percentage that you'd ever get into any fake silver from a big dealer like that. They don't deal in fake silver. You know? And you got to do it. You got to protect yourself from what's this crisis that's coming, and it's coming fast. Because I think the day's coming very soon when you're not going to be able to buy gold or silver anymore, but you'd still be able to buy cryptos. And believe me, the crypto price, this rally that we're moving into now might not stop. And in fact, it could be signaling us to the end of this present financial system. So you got your choice. You can go down with the financial system, basically go down with the ship, keep your dollars in the bank, and you'll have to realize if you got $100,000 in the bank right now, maybe in 2 years from now, which is not a long period of time, the gasoline to drive to the bank to try to take that money out of the bank might be worth more than the $100,000 you got in the bank right now. That's seriously how bad what hyperinflation can do to the purchasing power of your currency. You got $100,000 right now. You might not even be able to buy 1 ounce of real physical silver with it. That's how bad, that's what hyperinflation can actually do, real hyperinflation. And that's what we're headed toward. We're headed toward real hyperinflation. And you might not even be able to get out and sell your gold and silver for the hyperinflating currency. You might have to wait until some new currency comes along that has value. And believe me, it will, because like I say, that this situation is a exponential situation, and the government is reacting to it in a linear way. And what that basically means is they're behind the curve. They will catch up. The government will catch up. And they will release some new form of currency. And when they catch up, they're probably going to have to make that currency backed by gold or whatever, it might already be in the works. There's very few ways. They have to find a way out of this situation. Perhaps they're going to pull some sort of accounting trick or something. They do have gold. They've got 147 million ounces of gold in Fort Knox. Well, according to estimates. Now, I don't know if that gold's really there, but that doesn't really matter. It says on paper that they got 147.3 million ounces of gold at Fort Knox. And one of the ways that they could get out of this situation is they could just claim that gold, don't have to move it or anything else. The officials could drop a certificate of the value of that gold and then reprice the gold at, say, $100,000 an ounce, right? And then they could apply that against the debt, that certificate. And then it'd be a very simple matter then for them to raise interest rates then at that point, because they wouldn't have to service a massive debt load anymore. They could raise interest rates to any point that they wanted to raise them to, and they could bring inflation back under control. They could be planning on pulling some sort of trick like that. But there's very few avenues out for them to pull some sort of a trick like that, Maybe the U.S. Treasury could quite legally, I believe, mint some sort of a $1 trillion coins and mint a whole big wheelbarrow full of them. There's things that they can do that they will do when push comes to shove in this situation. I just don't know for sure. Stranger things have happened. But anyway, guys, that's kind of getting out there on a limb when I'm talking about them repricing gold and stuff like that to try to get out of the situation that they're in. But what's the alternative to doing nothing? They're just do nothing. They're going to have inflation tear the system apart. Boy, it's an exciting time to see how all this plays out, guys. But my recommendation for you guys is to get in there now while the iron is still hot and get yourself a few ounces put away for yourself before it's too late and you can't get any. Because that's real money. It's got no counterparty risk. And it will, look, you'll be happy when you get it. and you feel it in your hand, you'll be happy because you'll say, this is going to keep me secure in this hyper financial crisis that's coming in the future. It's insurance. That's what it is. Gold and silver is insurance. It's like buying insurance. Thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye.